Welcome to Wins News. I'm your friend and host, Amit Roy. Hope you guys are fine. Winter is too harsh this year. However, I'm here to tell you about the stock market, the risk involved in stock market, and risk involved in any market and fundamentals of stock market. Look, stock market is the best business in the world, trust me. There are risks in every business, from bank to bakery. Without risk, there could be no business. If you have a bank, that could even face risk if you have too many bad loans, NPAs, non-performing assets, etc. So any business you do, you have to take risk. And if you want to make money in life, you have to take risk. Now tell me, I'm going to tell you about some important things of the stock market. For me, stock market is the safest business in the world. Safest and best business in the world. Okay, before that, I request you please like me and subscribe my channel and share it. Now, why I'm telling you it's the best business in the world. When I used to be a kid, I used to go to have noodle soup, dumplings. So I was very fond of you, and that beyond that corner of the shop, there used to be a gold merchant. So he used to study with me in my school. One day I asked him, why the hell you don't make uh, dumpling business? So many customers are going, coming back. He said one thing, look, I don't like smell. And secondly, there's valuation. You buy today, and if I can sell tomorrow, price will go up. And this is the thing of stock market. No, I'm not talking about daily trading. I am averse to that. I don't recommend people doing that kind of speculation. My gurus, as Warren Buffett, Vijay Kedar, they don't recommend trades like that. You see. Now, I want to talk about fundamentals. If you want to have stocks, you must know a little bit of fundamentals. Now, what is fundamental? Fundamental is something like you have to know a little bit of the stock you're going to buy. Now, look, that stock has a very beautiful name. No, 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 you don't follow that name only. You have to see what is inside the stock. Like you are buying a pair of shoes, you have to do a little bit of research. You see in the showcase of a shop and you don't buy like that. You have to do a little bit of research. What kind of shoe I would wear, what the modern trade, etc. Similarly, in stock market, you must do a little bit of, research about the stock you're buying. Now look, what are the research? These are called very, very simple thing called fundamentals. So fundamentals, what are fundamentals? You see the stock. How is the stock? Who are the promoters? For me, that's most important. Because I don't buy stocks, I buy business. Even if I have a few stocks, I don't think I'm buying stocks. I think see the overall business. And I only buy those stocks which I know about the business, about the management. I try to collect data about the management. Like 5, 10 years data, 50 years data, if the company is too big. I don't buy stocks, penny stocks. It doesn't appeal to me. I buy good stocks and I stay invested. So, but see, firstly, you see the stock has how many, what is the business like? What kind of business they are doing? And are the stocks selling a lot of things? I mean, the business is selling a lot of things. What is the dividend they're paying? Etc. etc. But there are some golden rules before you invest in stock market. You have to see P ratio, profit earning ratio, book value, you know, and P ratio, ROE ratio. This you can see from Google. You just type one stock's name and you put ROE, return on equity ratio. You can find out. Debt to equity. These are very important. Now, how much debt company has? If the company has a lot of debts, you know, your profit diminishes and company's future is obstructed. So you must see this kind of thing also. Secondly, you see the balance sheet, last 3 4 years balance sheet. These kind of things you must see. About the product, you must go and buy yourself and taste that product. Like if you're buying consumer goods stocks, you see the product. You make a lot of inquiries before buying the stocks. And some people I've seen, in India or other places, they are very complacent people. They are doing jobs and they bought some stocks they don't follow and just imagine stocks will do. Well, it doesn't happen like that. Earning money is not so easy. Not so easy. It's not like casino, you go and you have money and you come back. It does, I don't believe in lucks. That's not the way. And if you even have stocks, you must have constant, you know, following of the stock. You must know what the stock is doing, what the management is doing. These kind of things you have to follow. Now, one more thing is psychology. Very, very important thing. Who is your enemy in the stock market? It is you. It's your bad information and it's your psychology. See, there are grudge selling. Some stocks are not doing. So you bought stocks and sold in few months or in same day, and you got some sort of grudge against the stock and you are going there, you're losing money. That's very, very bad. In trading, it can happen. There's one thing called scalp trading. That's most dangerous. Most dangerous. Suddenly you're buying and selling in 1 second world, you don't know what is happening. That's pure gambling. Never gamble with your money. Money is hard earned money. Don't lose your money and erosion of, invested money. You must realize how much loss you can take, how much loss you might take. In advance, you must think. Don't invest all your money in stock market. That is not the rule. And not in every business. You must keep some cushion money so that it can save you in hard times. Of course, you can sell your stocks and go out, but if the stock price comes down, and you have to book loss. So that is also a very important thing. So there is psychology is something. I will make a elaborate video on psychology, but I'm giving you some sort of hint. Fear. Like if there is general fear in the market and you suddenly lose your nerve and you start selling your stocks, that is also psychology. And greed. Now others are telling in front of you, look, this stock will go up. But there's no other reason it should go up. You could not fathom why should it go up. So, then your greed takes over. That is also very interesting thing. So you must control your emotion. There is a final thing called don't get married to a stock. So look, if the stock is not doing well, for any reason, you see, debt is too high, product is outdated. For just giving an example, Kodak used to be a top class stock few 20 years ago, and it is world leader. Now where is Kodak? It's bankrupt. Polaroid. Imagine Polaroid used to be a bumper stock. It doesn't exist anymore. So if the business has gone out of vogue or out of fashion, so you come out. Before you lose a lot of money, you keep information. Information will save you. Right information. So look, I just told you few guys are buying stock, they don't follow up, the information and all. So that they might lose money simply because you're a coffee bar. If you don't see other coffee bars are doing, what is their innovation, what's the price, you can't survive in the market. Same thing happens in the stock market. So if you rightly can play, I'm telling you, you can make lots and lots and lots of money. This is called money mantra. So this is my humble submission for you. Stay invested, buy stocks, keep an eye on them, follow up their newses, attend board meetings, or AGM's annual general meeting, read what chartered accountants are talking about that stock. Whoever is auditing that stock, read auditor's report very well. So you can read very well balance sheet. Very, very simple thing. You see the profit and loss account, cash flow statement. These are the fundamentals. So I believe in these kind of things, you see. I don't go for charts. Charts, you see, I don't like that kind of thing. I prefer 50 days moving average or 1 month moving average. Everything you can Google, you can find out about the stock. So before buying any stock, you research, you keep on researching on that stock. Then you buy. Don't suddenly buy. You then don't try to time the market. Market is a different kind of animal. It's more powerful. He doesn't care for anybody. He has his own rhythm and it will go at its own pace. So SEEP you can do. I mentioned in my previous video. You do SEEP, systematic investment plan. Every month you don't buy at a time. That is also one trick. So you can minimize your loss. If the price comes down, you can average your buying price. And don't try to follow all the stocks. Follow few good stocks, blue chip stocks, and stay invested. Thank you very much for patient hearing. Please like me and subscribe me. Best wishes. Thank you very much.